Hey, and welcome to this short market review video. I want to show you a classic continuation trade along with a couple of other trades such as breakouts. We also have what we would consider a intermediate term low trade as well, and we're going to discuss all three of those trades here in this particular market, the pound dollar. First off, let me go up to the pound dollar daily chart. I'm going to kind of show you how I would set this particular trade up and why I would be trading this particular market to the buy side. Even going forward, we've had obviously a pretty large pullback here or drop here in the market. We could see another drop, but I think we're going to still we're still going to see movement to push back up towards this upward side. But here you have the pound dollar. Now the pound dollar was in a major downtrend, still in really overall long term. It's still in a downtrend at the moment. But as you can see, we've had a nice pullback. First time really above the 50 exponential moving average in quite some time, since the middle of 2014. And so you can see here we've had a pull up above this 50 exponential moving average line, the red line that I have here on my chart. And you can see that we've traded above that line now for quite some time. Well, back here, once we've traded above that line for 10 days, you can see right around this time right here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We had a pullback here, and then that was followed up with a really a reversal pattern here on the daily chart. Now we can begin taking trades to the buy side. Even on the daily chart and on the lower time frames, we had been primarily taking trades to the sell side this entire time. And of course, with this big rally here to the upside, then now of course we're looking at taking trades to the buy side. So if we drop down to the 4-hour chart, we go down to May 5th, which is right around this area, which is that time we had the pullback on the daily chart. Price moved back up, started to move back up on the 5th, closed out up here on the 5th. You can see here we have a classic continuation trade, and if you haven't downloaded the free report on yourforexmentor.com yet, you can do that. Just go there and download the free report, the continuation method, where I teach this particular methodology to you. But you can see here we pulled back below the 50 exponential moving average line here on the 4-hour chart. You can see that it was obviously an uptrend on the 4-hour chart, short-term uptrend on the 4-hour chart. We had a pullback. At the same time, the Williams percentage range indicator dropped back below the -80 right here, then came back above on this candle, coinciding right here. It closed back above, just barely above that -80 level. That gives us an opportunity to continue with this buy side on the pound dollar. We continue with the buy trade, and of course our stop would go down here. Our entry would go right here above this this high. And that's pretty much how you would look at the continuation trade. You'd be buying here, your stop is here. It's about 105 pip risk. Now, how do you figure out the profit target, where this particular trade may have the potential to go, so on and so forth? Well, one of the things that we do is we'll go back to the previous move. We'll measure based on a Fibonacci retracement. We'll measure from low to high. And then we're looking at where this market retraced to. Well, we can see here the market retraced right around to the 38.2% area. Then what we want to do is we want to draw an opposite Fibonacci retracement, the opposite direction. So from the high here to the low here, and then we're looking at the extensions. Now, since this dropped down to the 38.2% retracement, we're looking for a lower extension of the 127.2, although you could have gone for the 161.8%, taken a risk, and followed another one of our exit techniques, which we teach in our Currency Signals Club, in our Forex Cash Flow Method course as well. We teach a technique called the profit technique, and that would have kept you in this trade for quite a bit longer. It would have made able to squeeze out some more profits out of it. But at the minimum, you're going for the 127.2 Fibonacci retracement there, and that's a good trade. Also, here we had a breakout as well above these fractal points. You can see that we had a breakout here to the upside. We had another breakout here to the upside. Now, we want to be taking fractal trades, of course. You can see we were making lower highs here, lower high, lower high, lower high, right? Then finally, we broke above that lower high, and so now we can begin to look at taking these fractal trades, or what I call breakout trades. They're breakouts above swing highs. or fractal points. As we can see here on the chart, these gray arrows are called fractals or swing highs. And so we would be looking at a buy trade above these areas right here, as you can see. And price did go above that area. And then once again, it pulled back. It made a lower high, then it broke above. We could have taken another buy trade right here. At the same time, we had what is called an intermediate term low form. So we had a low form, the lowest of the lows right here in this area. We had a higher low right here, and that higher low had a break above the left side and the right side, both on the left and the right, above the high of that particular candle. That forms what we call a short-term low. When we have two of those now, we have what we would consider an intermediate term low. So right here, an intermediate term low formed at this point because we had two short-term lows, one here and one here form, and that gives us another breakout opportunity above this high right here, and that gives us a fourth position we could have taken. So when you have all of these things line up, when you're trading with the direction of the trend here, you're using some very high probability trade setups like the continuation trade, and then you take these add-on trades through breakout methodologies, also through market formation methodologies like the intermediate term low formation right here. You can really stack on to your position, and you can really grow your account exponentially by doing that. And so I'd highly recommend that if you haven't taken a look at our Currency Signals Club yet, you do so. If you haven't taken a look at our Forex cash flow method or our Advent Forex course, I'd go ahead and take a look at those. We teach all of those methodologies in those particular courses and in our club, and you'll really enjoy it. So I hope to see you inside, and I hope you enjoyed this market review.